3, 2, live.
Farts. Old farts. Two old farts. Steve and Dave. Sometimes you find a diamond in the rough. Not this time, though. This is just rough. Two old farts. There is no better waste of time. Two guys. Two old guys. A lot of BS and more drivel than you can shake a stick at. Steve and Dave. God help us.
Oh, we're back, everybody.
All
So
right.
So David's not with us today because we have another old part. And actually, John's, I think, older than all of us. It's like dirt. But John is from the
Yeah,
Lost
sure.
Dollar Business Club. I know. From the Lost Dollar Business Club on the Two Old Farts Entertainment or TOF Entertainment channel. So if you haven't seen Lost Dollar Business Club, every Saturday morning, 6 a.m. Eastern time, feel free. But we have Mr. Ali with us, who's with I call it Zeropa, but it's Zeropa. So you have to forgive my New Yorkness. But Zeropa, and he was on about 3 or 4 months ago, and we're going to link the Zeropa video below so you can see the video of what it is and whatnot. But we figured we'd have him back to give us kind of an update on where they are, what they're doing, and what they need. We have John, because John is going to kind of ask him investor type questions because they're always looking for money. And we figured this would be a good way for potential investors to understand what they're doing. So a couple of disclosures. One, I do sit on the board of Zeropa. And two, this is not for investment advice. Don't take anything we say, whatever. Don't, with a grain of salt, consult your accountants, your attorneys, your financial planners, your financial analysts, your CFAs, and a list of 50,000 other things that you need to consult before you make an investment. This is just a show that we wanted to do because I think their concept is fascinating, and I'm hoping that they grow. I know they're in Guernsey. We'll let Mr. Ali explain all that. So we're going to let you, Mr. Ali, give a brief introduction of what Zeropa is. And then John is going to jump in, and then we're just going to go from there and see where we go.
Okay, brilliant. Thanks for that intro. So
No worries.
think of Klarna or Zilch meets Top Cashback meets the bank of mum and dad. And so what do I mean there? So in essence, Zeropa offers financial education and tools and crucially interest-free loans towards the vulnerable and disadvantaged. It doesn't give cash, but it offers goods and services towards food, utilities, clothing, white goods, furniture, household repairs, and basic tech to enable digital inclusion. And we offer loans of £50 to £1,000 over 1 to 52 weeks to the borrower. And we use a peer-to-peer model to bring in the capital from the lender. In terms of our revenue model, it's a retailer that basically is paying our running costs. So the more we give incremental sales to a retailer, a manufacturer, introducing PCAs to a financial institution, they give us referral fees. And it's those referral fees that in effect help us grow. The more people we can help, the more we can buy. It becomes a virtuous circle.
Pretty cut and dry. So John,
Yes.
you read the latest, I guess, investor presentation or PowerPoint.
Yes.
So if you, and I know that they're always looking, they're doing a big program right now in Guernsey and they're doing well with it. But they're always looking for money, right? Because you need money to go forward. So what questions would you have as an investor? Because I know that they're going out as we speak to investors and whatnot. So figure for anybody that might have an interest, this may help them along. And like I said, remember, we're not investment advisors. We're not investment bankers. We are nothing. It's just a show. Please consult your professionals before you make any choices, but we figured this might help you out. So John, what are your questions here?
So, my first question was, so the revenue comes from the discount of what somebody, say you want to buy, food. So you send the money to the supermarket. The person that takes the loan, gets the goods. The discount, the difference between the let's call it the retail price and the discounted price is what you make.
Yeah,
Now,
so we might
if
do
this
it by an
ca-
e-voucher. So for example, if
Yeah.
the e-voucher has a face value of £100, we buy it
Yes.
for £90.
£90. So, do you think retailers will let's just say this is very successful, and you get the 10 million out of the 17 million people that are, on the lower economic spectrum, where they have all these financial problems, where they have £5,000, £5,000 that they're in debt. Will retailers eventually pull out, or will they maintain the discount, or will they try to narrow the discount?
I'd say two things. One, as we scale, then the retailers will knock on our door rather than us knocking on their door. And the good thing is we need to eat every day. So there will always be revenue for them. I mean, in very simple terms, I was trying to just very simplistically think, if you think about it, other than interest and gambling, you normally always spend your money on goods or services.
Sure, yes.
So providing we can find a relationship with any retailer that has goods and services, and obviously Klarna has demonstrated this worldwide. Zilch has now come, I believe, to the US, and they're expanding very fast, a double unicorn from Europe, 3 million customers, I think, in 2 years. That, you could argue, we've got similarity in that it's incremental revenue for all of these retailers. And obviously retailers are hungry for extra sales. And the great thing that we're doing is we are democratizing credit. So we are allowing credit to people that normally would be overlooked by the financial institutions. They would be deemed not credit worthy, but
Sure.
They're being charged crazy rates of interest. We're stripping out the interest and giving access to credit.
Yeah. So I guess, my a little bit more sort of I'm thinking the supermarket, currently they give you a 10%, discount, right? The voucher is 100, we get 10, you get 90, and you get 10. The supermarket's 90, you get 10. Do you think you can maintain that margin, or do you think eventually is it a teaser? Will it last, or is it consistent? Do you think? Do you have a contract with them that says, okay, if we give you X amount of people, you'll give us 10%, and if we increase it to say 100,000, we'll give you 12%. Is there an incentive for them?
So in terms of relationships that we have today, we have a relationship with a white goods retailer, electricals and furniture. And that's starting off on 5%, but up to 30% with furniture as our volumes grow. Similarly, we've got a relationship with Whirlpool, which is Hotpoint, Indesit, KitchenAid, and Whirlpool, obviously, if we were in the US. So that's the parent company. They're offering our customers a 25% discount. And we have a potential relationship with a food retailer that offered us the 10% at the get-go. But I think the point that you're making, over time, even if they drop the rebate, the more customers we put through, then because our cost per transaction won't increase, we will still make a similar margin or a healthier margin, because our cost per transaction, our cost of handling, let's say, every £1 million of loan becomes less.
Okay. So you're saying, but what happens if you said that they might take away the rebate, or?
No, I'm saying that if they say, at the moment, we're trying to increase our rebate. You asked the question, what if they reduce the rebate? So I'm saying, say if they give me 10% on 1 million, but they give me 5% on 100 million, I'm still getting a greater revenue.
Got it. Okay. All right. The other thing that I noticed in the presentation, you're looking for, I think it's £2.5 million. The number that always pops out is, the management team is taking £1 million over 27 months. Mm-hmm. The rest of the team is, and other costs take the balance.
So our entire salary costs are in that million. So it's the management team, it's risk and compliance, it's our loans officers, our customer service, etc.
Okay, so it's right, because when I was reading the total cost that you outlined, it said legal and compliance and loans and IT and marketing, they were separate from the management team. So
so legal and compliance, this is external consultants that we might have to pay as part of our FCA application.
Yeah. Okay. And
But we'll have our own internal compliance people as well, because obviously we need to hire in some expertise, pay some expertise, and then also work with the FCA, and they may make certain requests that we don't have the internal experience.
So that's 2.5 million that goes, to your cost side. What's the funds to loan? What's that?
So the lending. So whilst we've got an equity pool in there, an equity reserve, a lending reserve, the intention is that over the 5 years we would have had brought in 9.6 in lenders' money. So I make the differentiation. A lender is putting in money to lend out to borrowers, and then we have equity investors. They are investing to grow the business and get returns as dividends.
So that number is, the 500,000 liquidity reserve. That's
on day one, for example. If we have no money to lend out, then we need to have some money to lend out before lenders come on board.
Yeah. Okay. So that's coming from your equity.
Yes.
Yeah.
Because at certain times you may have lent out all your money, and people might still be knocking on the door saying, I want to borrow. So it's always going to be a healthy a balance between money in and money out.
Yeah. So my concern is that the management team cost needs to come down, at least in the first 2 years, so that, because it's just too big a number against the loan funds that you would have available. I mean, if you're successful, that the management team cost can then go up as the business grows. That would be my.
I mean, in our phasing, we're starting off with 10% of time of some of our core staff, increasing to 50% and then 100%. And imagine a hockey stick. That first year is the bottom part of the hockey stick, and then the next 6 months becomes more plateaued, and then the final bit is when we're bringing on the next tranche of people. So we won't have our full reserve of people until towards the end of the 27 months. So in fact, perhaps a different way of presenting it is that we could say that we need 1.3 million, say, for the first 15 months.
Yeah, I think that would probably go better in somebody's eyes if they're looking to put some money to work with you.
And also, I mean, our original ask was 2.3 over the 5 years. So out of the revenue we generate and out of the equity that we bring in, we're planning on spending $1 million on IT.
Right. So the banks that you're going to refer to, customers to open bank accounts.
Mm-hmm.
Have you approached them for them to put capital so that you can lend it out, or have they not been keen to talk about that?
So I've approached them in 3 ways. So some banks, they already have financial education model materials, and we're very keen on educating our customers, helping them manage their money better, as well as giving them the loan. Secondly, we've asked for a seed investment. And thirdly, we've said, look, if we refer PCA customers to you, some banks in the UK will offer up to £200 to open up a PCA account. And so I've approached 3 or 4 that are social impact type lenders or more involved that way, such as TSB, Nationwide, and I'm now approaching others that are perhaps more mainstream to see whether they will come on board. I think it's the perpetual chicken and egg. If I was saying, I can promise you 30,000 customers, they'd be interested. If I'm saying, well, we're in a startup phase, it's going to be a few customers on day one, et cetera, then it's obviously more difficult. So I think they like the concept. Everyone in the UK is talking about financial inclusion. Everyone is talking about helping the unbanked. There are some demographics in the UK, especially BME households and some on religious reasons that don't get involved in mainstream banking, that are finding it difficult to access credit.
So, is there any way, for you, the banks usually, I'm not, I don't have the exact details, but I'm assuming that all the big four banks in the UK have some kind of a foundation. Isn't there a way you could, I guess, pressure the banks to fork out some? Because you're not asking for a lot of money. It's just like, I mean, it's nothing to a bank, right? So maybe could you go to their foundation and say, look, we need this. Could it be part of it should be part of their mission?
Yeah,
I mean,
like the CSR, ESG funding. And I guess many of them have those foundations, but typically they only help charitable institutions. And because we're set up for profit, but
yeah,
we're doing good, we're making no money out of the borrower. I think that's where we've got to align with, perhaps, I think it's MasterCard that has a
yeah,
center of financial inclusion. I need somebody to open the door into those group of people. And I'm sure there's a similar group with Visa, with the big banks like JP Morgan, Goldman Sachs. I've been talking to Chase in the UK. That's one of the other organizations I've been talking to.
yeah. Is there any way that you could approach? So if you're not lucky with, if you don't open the eyes of all the guys that you're talking, Goldman, Chase, which it should be a no-brainer to put the money in because it's zero. The risks are very low from their perspective and your perspective. What if you approached the I don't know who the UK regulator and say, is there some kind of license, the licensing of the banking license? Is there some way to tie? Look, you need to do some. I don't know, charity is the word, but social impact as part of your license. Here in the US, if you have a broadcasting license, you're supposed to have some public value added for having that license. So is there a way you can put pressure on the banks and financial institutions to sort of be investors via the regulator or I don't know if the exchequer has any pressure on the
I mean, the Bank of England through the PRA is the regulator, and then you have the FCA that gives the lending licenses. But
right.
There is customer duty that's coming in, and one of the things that's, as I was saying, is being spoken about very heavily is financial inclusion, and I think that's where they need to walk the walk rather than just talking.
Right. Yeah. Because that would seem that it would be because this is not like you're trying to invent a battery or you have a new technology. I mean, it to me it's pretty straightforward. How you earn a return. You help a lot of people that are they can never get out of Dodge because of the situation they're in. Right? They don't make enough money. They need. They're living paycheck to paycheck. They do stupid things, with their money sometimes, or if they have a bank account, they what's the term? They spend, they use their debit card, they
end up in overdraft, etc.
Yeah, overdraft. They overdraft their account. They get screwed with fees, right? So it's a bad situation. So are you actually in your financial education? But the banks say they have financial education. But, if you're at the 20,000 level, you're not going to the web TD, Lloyd's Bank or NatWest website and looking up. Oh, I'm going to get educated. It's just useless. It's just PR. It's absolute crap, right? The banks are just bullshit. Sorry, but.
I mean, one of the things that we're trying to do, and it's not part of our customer journey today, but what we want to do is to make, say, like 4 30-second videos mandatory. So like, what is a loan? What is an APR? What is current account? How to manage your money better? through cost saving, money saving tips, etc. And then two companies that we're signposting to. One is Nova Money and the other is Kestrel Money app. They both help you manage your money through open banking. They give you budgeting targets. They show when you might be heading to overspend, what the trajectory is. But as saying, one could argue in a way these tools are even still too complicated. You almost have to have it the level that it's hidden away in your banking, where it'll have what your upcoming payments are, or some banks will give you an alert. But ideally, what you want to know is by Friday, you're going to be $50 over if you don't change your behavior on Tuesday. There's no point telling you on Friday you're now in your overdraft.
Right. Yes. But okay. So yeah. Well, all right. On that side, I think I don't know. I think borrowers have some responsibility. I think they're not that dumb. This day and age. Yeah.
So let me just ask a few things. So you're looking for £2.5 million, which John brought up. So use of funds at a high level, and then I know you have a program going on in Guernsey. So can you, I guess, talk about that as well? And then the third question is, if someone does give you money, whether they give you £1,000 or £2.5 million, how do they get their money back? So
Okay.
I think that's
so great questions. So in terms of our use of money, I'll give you a breakdown on that. And the pilot is actually in the Isle of Man. So that's where we're running our pilot at the moment. Our pilot has been running. It ran for 3 months between December and February. We were expecting to have applications in total of £15,000. We actually had over £20,000 of applications in those in the first month. We've done radio adverts on the island, and that's how we've brought in our customers. In terms of where we're going next, we want to bring on more investors and equity investors and more lenders. Obviously, the more equity investment we have, then it helps us grow. The more the more lenders we have, the more borrowers we can bring on board. And in terms of how you get your money back, you get your money back in two ways. So getting the capital is through the repayment. So as it's lent out, as it comes back in, then you can theoretically withdraw your money if that's what you would like to do. If you want to carry on helping more people, then it's like an evergreen fund. And I guess that's the big difference, using one of those lines that many people have heard, give a man a fish he eats today, teach a man how to fish, he feeds his family for life. I think that's why the education is so important. But equally, if you give money to charity, then potentially it only helps that one family. Here, that £100, once it gets lent out, let's say, just for argument's sake, only £95 came back. When we lend it out, we then can help the second family and then the third family. And so that's the great advantage of the model that we've thought up. In terms of the use of funds, the £2.5 million is split in the following ways. So as was mentioned, there's 1.3 million on management compliant and loans. On IT, there's 200,000, marketing 100,000, and we've got a liquidity reserve of 500,000. And then we've got compliance and KYC, AML, and legal and accounting of 350,000. So in total, it's 2 million in running our operations and 500,000 in a liquidity reserve. As I was explaining earlier, at certain times there'll be a difference between the money coming in and the money going out, and obviously we want to continue to help people as we then get more lenders coming on board.
And so right now, as you're out raising funds, what's the biggest obstacle that you're finding? What's where someone says, I would, but is it that they don't believe in charity, like, Chase Manhattan? Or is it they just don't get what you're trying to accomplish on, if you will, a UK level?
Yeah, so I think the challenge is exactly how does our model work? So I think we have to have that intro conversation with people to say this is exactly how it works. This is the simplest thing. And at the simplest level, whether it's a washing machine you're buying at £270 versus 300, or a shopping voucher for 90 versus 100, once they get there, I think they understand it. The second is because we don't have the UK license, the FCA license, and that's what we're seeking to get. I think once we have that, that would make it far more appealing for organizations come on board on scale with private investors and private lenders, I think they're more willing to do it because they see that they can help people. So that's where, it's been non-exec directors, family and friends that have invested so far. And I think it's going to be a question of just having conversations with more and more people, especially with VCs, angel investors, and hopefully, that people that watch this video, one of them will have a black book or a contact, and they say, it's not quite for me, but perhaps this social impact fund, perhaps this VC does spend some money in this type of area, or they just know somebody that's wanting to good. I mean, obviously, the US philanthropy has been really big for a very long time, and increasingly is becoming so in the UK and Europe.
And then,
I want to ask you, have you tried?
And see, John's in New Jersey, and they don't have electricity, or they also don't have internet. So they've got a little gerbil that runs
we're
around.
a third world here.
Yes, you are, because you're freezing up. Go ahead.
No, I was going to ask, have you tried the like a GoFundMe website to try and raise funds? Because that's I think that would you'd get a lot of people responding to the model.
Yeah, I think on the GoFundMe, I've been trying to attract people to support. We actually have like it's called a CIC, a community interest company. It's like a charity that gives grants of £50 towards people. So I think if we did a funded investment, then there are various regulations on doing that in the UK. So that's why we have deliberately not done that. In terms of just saying, do you want to come on board as a lender? Then that might be viable once we have that UK license. But at the moment, as I was just saying, our license is only for operation in the Isle of Man.
Okay. So where are you as a company with your license from the FCA?
So we're preparing all the paperwork. One of the companies that we might be potentially working with or partnering with, we're talking to them whether we could perhaps be an authorized representative that would actually fast track our ability to trade in the UK with regulation. There is a route to trade without regulation, which is how many of the buy now, pay laters have done, but that buy now, pay later route would be closing. So we want to go for regulation, full regulated route rather than using exemptions. Very cool.
John?
All right, so the GoFundMe is not really a tool until you get the regulation. Until you get your license in the UK, basically what you're saying.
Yeah, I mean, I think that there are various, I think they're called, is it promotion type thing, rules and regulations around that. But I think from a conceptually, I totally agree with you that, if somebody has £10, £20, £30, whatever, or, bigger amounts, why wouldn't they want to just help somebody? They're not driven by having an equity investment. They're not driven by having a return. They just want to help others. But, something I didn't mention earlier on, our target numbers for year 5, and again, this isn't financial advice, we're not encouraging you to invest, but, our numbers say that we should be able to make an 8% return for lenders and a 33% return for equity investors. And whilst now when the base rates are so high, you're thinking, well, that's not that great. Equally, just think about it that a bank is perhaps charging up to 20-30% interest, and then the legal money lenders are charging up to 1,000% APR, and the illegal ones, many times over that. We're making our money not out of the borrower, but from retailer relationships.
Right, the discount. Yeah.
Yes.
Yeah. So maybe it seems that you should target equity investors so that your money is kind of a little bit more permanent.
Yeah, and that, I think that's goes back to like what we were saying. Why would we have a liquidity reserve? The more money we can bring in as equity, then one model that I could have done is instead of having just 2 million of equity and 9 million of lenders, we could have had 11 million of equity. One, it obviously would mean that the all the ratio holdings would be different, but also then the money is more tied up and it's balance sheet lending. And to avoid balance sheet lending, that's why we're using a peer-to-peer model.
Okay.
And can you tell everybody how you're doing on Guernsey? Or I'm sorry, I don't know why I say Guernsey because we used to do business on Guernsey. I like that, I guess. Isle of Man. Can you tell everybody how you're doing on the Isle? Sorry, Guernsey, I feel bad for you. How you're doing on the Isle of Man?
Yeah, we're
And
willing to
how
take
that's
phone
program
calls from
working.
Jersey and Guernsey if they want us to
You,
come out their way.
and when he says Jersey for you people in the States, that's not New Jersey. That is the Isle of, in
Yeah.
the Channel,
Yeah.
Jersey, and
Yeah.
where you hide your money many years ago. But anyway, so tell us
Right.
how we're doing on the Isle of Man. Like people that are
So,
interested in this, like, how's that going?
yeah, so on the Isle of Man, I mean, interest is building. We are regularly talking to potential investors, we're receiving donations from some people. We had a radio advert just the other day, and the volume that's going through our web keeps increasing. Number of views of our argood.im video increased. So in the Isle of Man, we actually use branding called the Interest Free Loans Company, and it's argood.im, argid.im, which argood actually means money in Manx. So that's where that name came from. So yeah, we're, as I was saying, we're doing it in waves. So our aim is once we raise the next chunk of money, then we will go back out to bring borrowers in again. But we're getting a steady flow of applications all the time.
Very cool.
All right.
So how much? Go ahead, John.
No, I was going to say that it seems that the number one priority should be to get that UK license so that you can just then feel free to raise money in a variety of ways. So then you can really expand your marketing, social media, and then blast the place. Because I think you'll get a lot of people when there's, given your model that you don't have to put a guarantee as a borrower, and you can get a discount. Yeah, so it would seem that the license is kind of the key to you really expanding and being successful. Would you say that?
Yeah, I mean, I'd say there were initially there were, I guess there's three or four things that everyone needs. You need to have an idea. So I had the idea. Then I needed to put a team together, and Stephen came on board and the rest of the board. Then I needed the tech and a pilot. So we have the tech and the pilot. So we've got a front end built for loan origination. And the fourth bit that we need is that FCA license. Because once that FCA license, then that gives us scale, and we can demonstrate that we can do it not in a market of 90,000 people with 10,000 people on benefits and receiving pensions, but we can do it on a market of 65 to 70 million people, where, as you were rightly saying, it's 70.5 million people that are really struggling. 10 million people are unbanked, and collectively that market is worth 50 billion pounds. In our year 5 number, we've said that we're going to go after 26 million and 304,000 customers. So the more that we bring in, the more people we can help, and the faster we can grow.
So, could you eventually become a bank, or is it too costly to start a new bank, and the regulatory cost is it's better? This is a better model.
I'd say Revolut's been trying to do it. I think obviously and they haven't succeeded in getting their banking license in the UK. But if we were to become a bank, then fundamentally, I guess we would be taking the whole banking sector head on, of saying, hey, you guys, you all lend money with interest. We're doing it without interest. But I guess just to clarify, and just so everyone is fully aware, we don't give cash. We pay for goods and services. But as I said at the beginning, other than interest and gambling, most of the time you are paying for goods and services.
Yes, absolutely. No, I think the model is, it's a good model because, as there's a ton of people, 17 million in the UK. We know in the US that, at least 60 million or more, probably unbanked or don't have access. They have access to a bank, but they're poor and they don't have the funds, and it just doesn't. It's better for them to stay in the cash on a cash sort of basis. So I think that there's huge potential, and also potential to take on the banks in the future if you wanted to do that. But because now
I mean, I think the other angle that you mentioned with a bank is obviously you'd get things like a checking account or a payment card. So obviously we don't have either of those, and I guess the world used to operate with that, but now with your phone, it's all contactless. You don't even have to have that card, and you don't necessarily have to have a checking account.
You could.
So where do you see expanding? Do you see going from the UK to the rest of the EU? Do you see the US as the next stopover? Do you see Asia? Where do you guys want to take Zeropa? Or is it just going to be a UK type thing?
We definitely want to take it global. I'd say, potentially after the Isle of Man, if we choose to go island route first, the Republic, then that allows us into the EU. If we go to the UK, then we get scale, and then we would still need to have to then, due to Brexit, we would still have to then have a EU partner to have the passporting rights.
Gotcha.
Going to the US, I think you were saying that we'd have to give regulations state by state, but I think just with this scale of the opportunity in the US, the commonality between how banking works, sadly that people are in a similar financial situation with the cost of living crisis, and even before that, I thought up this concept in 2015-16. Sadly, people have been in the same boat ever since, and it's just got a lot worse. And then whether you expand to Asia or Africa, I think there are opportunities to have smaller amounts, perhaps say in India, Pakistan, parts of Africa. And then say if you were in Algeria, Morocco, South Africa, then it might be that they're bigger amounts. So I think you can dial up and down the scale. Somebody was telling me that I think they were saying that literally for less than £100, they can get food for a whole month for college, which, just being able to lend that sort of money to somebody and help them for a whole month is obviously, that would just be game changing again, because we're not charging any interest. It's the retailer that's paying to give them that credit.
Very cool.
So, all right. So, I was thinking that the financial education piece here, have you thought about sort of like on a, I don't know, bi-weekly basis, have the people that have taken out loans, go through a little quizzes, so that it's not just a one-time sort of video that they watch or that they read, but it's sort of like a constant messaging. Because people learn by repetition. It's if you just read something one time, okay, you understand it, and you sort of move on. And in the world of where you're living paycheck to paycheck, you're not reading this stuff every day, or you're not going to the web and searching Google or some AI chat bot for information, right? So is part of the have you thought of the sort of the constant messaging and education piece?
Yeah. So, I mean, we've got an app in iOS and Android that does similar to the website. And you're right that theoretically, if somebody's logging in either to send us a payment or check how much they owe us, then that would be the perfect opportunity to perhaps have a top-up video or even the same video in rotation. So then saying, right, that video you watched, what do you remember about APR? What do you remember about loan? Here's a cost-saving tip, and I think by having those things on a regular basis, I think they like they say that you learn, as you're saying, you learn things by repetition, and if you only learn it once, if you only watch that once, then it's not going to really sink in.
Right. Yeah. And maybe put some intelligence into somebody that's either behind on a payment, or there's some issue. You can bring an education piece there and say, well, what's going on? Are you living within your means? Did you buy something on impulse?
Yeah.
Right.
I mean, obviously everyone's talking about ChatGPT, but by adding AI functionality linked with the open banking, then perhaps, for example, if I was spending, I had spent far more than I normally would, either on online gambling, on a liquor store, or on that just my groceries were totally out of kilter with the previous week. You might say, is there a reason why it's so different to your previous spending behavior? Is there something I can help you with? Or what you're spending on your broadband or on your Wi-Fi or on your cell phone? It may be that you can say, well, actually, we've got a relationship with provider Y that can actually do it cheaper than your own provider. So I think there's clever ways that, rather than the functionality of chatbots at the moment, which is very much backwards and forwards, like playing table tennis when you used to have that icon on your black and white TV of the thing going backwards and forwards. It has to be far more gamified, of encouraging the people that are going to be using this to actually improve their financial education and manage their money better.
Yeah. So the other question, another thought really is, the people that are taking your loans, are they on some kind of government assistance plan? Or are they just people that are not getting any government help, but are still struggling?
Yeah, I mean, in the UK, there are definitely many millions of people that are actually working and struggling. They're saying that teachers and nurses and others working in public sector are often using food banks now, and so that means that potentially there are people that are earning between, say, £25,000, about what's that, about $50,000 as a household. They are struggling to make ends meet, and so I would say the people that are borrowing from us, they will typically perhaps be earning less than £25,000, but it's not to say that somebody that's earning more than that is also struggling, and they will probably be on some form of benefit. Equally, there'll be some people that are purely on benefits, so they are getting unemployment benefit, they're getting disability benefit, they're getting some sort of in-work credits, tax credits, or other assistance from the government, but they still need support. And because we're lending only up to £1,000 in the UK when we have our FCA license, and we're doing it over 52 weeks, then theoretically, whether it's £1 a week or £20 a week, then we're getting the budget that's right for each person, because everything has to be fully affordable. Otherwise, we won't lend to them.
Yeah. Okay. It could be that if you get that license, you could get, I don't know the entity in the UK but maybe have some kind of a joint sort of, or some kind of advertising, or something that puts your name when they're going to ask for whatever government assistance they're looking for, housing cost, or food, or sort of kind of join it there. And I mean, I guess the incentive for the government agency, would be, hey, they're gonna get financial education, and if it'll supplement what the government is doing, it would be the pitch.
Yeah. And I mean, as you're saying, ultimately, by helping people move out of poverty, improve their financial situation, it has a longer term societal benefit. It brings down the cost to the welfare state, and it allows people to actually manage their money better. And unfortunately, these things are all connected. Often, poor education, poor housing, poor employment opportunities, poor financial literacy. So it's by improving each of these little things, hopefully a person's lot will improve, and they'll be able to move themselves out of the situation they find themselves in. But I think that's the key thing. They need help. And that's why those lenders, those altruistic lenders, are so key to this model, because it's people helping people.
Yeah.
And with that, gentlemen, we're going to call it a day, because we can go on for this for about 5 more hours. So if you're interested in it and you can't find Zeropa, reach out to us. We'll put you in touch. I want to thank both our guests today. John, we'll see you on Friday, our Saturday on the Lost Dollar Business Club. Mr. Ali, you can always come back when you would like to. And once again, remember, not investment advice. We're not investment advisors. Check with your accountants, your attorneys, and whoever, your financial advisor, if you want to do something like this. And if you're thinking you want to start something like this in your country, reach out to Zeropa, and they will help you with that. Gentlemen, have a wonderful day. We'll see everybody later. Cheers.
All right. Good talking.
Thank you.
Well, sadly, this is the end of today's show. A really big thank you to everyone who contributed today to the show. And of course, thank you to my co-host, Stephen Oldfart. I'm David Oldfart. Don't forget, subscribe to the show and get all the latest updates from Two Old Farts Making Noises.